Welcome to Trading Nation. I'm Sara Eisen. With the U.S. dollar surging in recent months, two commodities are having very different reactions. Oil is surging along with it, 17% in the last 3 months alone. On the flip side, gold has been sinking 3% during that time. And our next guest says this divergence could be a bullish signal for the market. Wald is with Oppenheimer. Davitt is with Harvest Volatility Management. Why do you see this as bullish?
Well, let's start talking about there's a typical inverse correlation between the U.S. dollar and commodity prices. When the value of the dollar rises, typically costs less to buy commodities that are priced in the dollar. So it's no surprising that we've seen the U.S. dollar reverse its year-long downtrend. It's strengthened, and against that backdrop, the price of gold has broken down. That's the typical relationship. What's interesting to us is that the price of oil has held firm against this strengthening greenback. So our take is that this is a sign of bullish risk appetite, that economically sensitive commodities like oil are outperforming more safe haven ones like the price of gold.
Dennis, what do you think of that? The fact that the dollar-oil relationship isn't necessarily what we have been seeing in the past, and that dollar-gold is more of a traditional inverse relationship?
Yeah, I mean, I go back to a lot of what was just said. I think oil and gold are somewhat uncorrelated. You tend to see gold rally when you produce a lot of dollars, where oil tends to be more fit along growth in different economic sectors. The last time we saw oil really expand was when we saw a huge emerging market expansion, and because of that, a lot of energy was used, and so the price of oil went higher. I think that growth is coming from the United States right now. I think the byproduct of this outside of equities, and maybe equities are a buy here because they're good hedges against inflation. So the inflationary aspects of oil outside of the dollar are what you should really look towards. Gold, I feel one of the reasons gold I think is sold off is because a lot of people who bought gold have moved into Bitcoin. And I know that's probably yesterday's topic, but I do think that's part and parcel of the sell-off in gold. I think the U.S. is easing up on their manufacturing of dollars into the marketplace, and I think there is strong growth coming out of the United States, and that's where we're seeing the price of oil go higher. The question is inflation going to follow suit?
Ari, do you see any kind of correlation between gold and the dollar and Bitcoin?
I haven't looked at it in terms of the relationship with Bitcoin. I know a lot of clients, or I guess aside from trading in their personal account, I don't know if at the institutional level, Bitcoin has yet become a truly investable asset class. But just kind of, again, drawing back to what I think, highlighting some of Dennis's points that I agree with a lot. What you don't want to see is kind of the deflationary scenario that we saw in 2014, 2015, where you had a big rise in the price in the U.S. dollar coinciding with a breakdown in the price of oil. That was the emergence of the more risk-off trends that you saw. The rates subsequently started moving lower. We saw a big risk-off rotation in the equity markets. That would be much more troubling. We're seeing it go the other way. Yeah. Yes, we could see inflation coming back. Equity markets do perform well during inflationary environments, or at least to the point of getting to higher inflation. We're not there yet, we don't think.
Yeah, this time is a little different. Get back to us on the Bitcoin correlations. Ari and Dennis, thank you. And thank you all for watching Trading Nation. I'm Sara Eisen. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.